You guys doing? This is a new YouTube channel, and I'll be talking about top-down analysis on this channel. What I'll be doing basically is that I'll just be like recording my analysis, how to do top-down analysis for people that are just beginning, because it's something I knew that I struggled with when I was starting my forex journey. It was very strange to me then. And I would see some of my mentors then they would go to this time frame, go down, understand what's happening down, go to another time frame, understand what's happening there. So it was something that I couldn't grasp immediately. I think to some extent now I'm trying. So I just feel okay, I should, be making videos of myself doing top down analysis, and I wouldn't want my videos to be too long, so I'll go straight to the point. So before I can start doing my analysis, I think for this first video, I need to show you guys, the thought process behind the whole analysis. So firstly, in my top-down analysis, I use the daily time frame for direction, meaning I want to use the daily time frame to see where the market is going. Am I going to be bullish minded or am I going to be bearish minded? Am I going for a sell or am I going for a buy? Am I looking for a sell or a buy? The reason why we use the daily time frame is because it gives us a more accumulative data of what the market is doing overall. You get lower time frames don't really hold strong value when it comes to direction. You get because the market it works with a how would I put it? It works with direction from a higher time frame. You get lower time frame are just what happened in between. But the higher time frame will show you the real movement, like if an economy is having like a breakdown, for example, and maybe the economy is going down. If you go to the 1 hour, 1 hour time frame or the 15 minutes time frame, you still see some buy signals. But overall, the market is going down because why? The market must be traced and do some fake out to deceive people in the middle. But when you look at the daily time frame, you see what the market is really up to. So we use the daily time frame to know the direction of the market. Then we use the 4 hour time frame for our structures in the sense of we look for our supply level, we look for our demand level. You understand? We look for the levels we are working with. You understand? Where we know that okay, if the market break past this side, we are looking for buy. If the market break below this, we are looking for sell. You understand? So I will show you guys all these things on the chart. I'm just trying to make you understand the framework. You can screenshot this so that it will be easier for you when you're doing yours. Then for the 1 hour and the 15-minute time frame, we now go down. We draw our levels. We draw our levels. Okay. We draw the levels to know okay where exactly are we entering from. We draw the levels to know where we are entering from. Now I put 1 hour 15 minutes. You understand? Depending on the how would I put it? Depending on which level is clearer. You understand? Because sometimes the levels on 1 hour can be much clearer. But if the levels look too big, then we can go and bring it down to the 15-minute time frame. You understand? Then for the execution, there's 15 minutes, there's 5 minutes, there's still 1 minute, depending on how you can refine your entry. So all this will be explained better when you're seeing the full practical of the whole analysis. Straight into the chart to see all what we've been talking about. So yeah, this is the 1 hour time frame as you can see here. So now if you notice what's happening here, the market has been on a downtrend for a while. You understand the market has moved like this, making higher highs, lower highs, and lower lows. Goes down here, comes up, goes down, came up. Now this is like a week, so we can't count this as a break of the structure. So we use here, we count down here. But now we notice that the market has actually broken this high here. You understand? But it has not been a confirmation that this is an uptrend because aside the market just breaking it, we want to see a continuation to be sure that okay, we have fully changed direction. Now it looks like we have changed direction, but we are not fully sure. Remember, the market is all about predicting. Nobody knows anything, and we look for confluence to back up our prediction. So for now, we can't say that the market has changed direction. We can just see the market has broken structure, and some people that are actually very good at risk, this is enough for them to start looking for buy positions ordinarily because that's broken structure. But so many times we have seen the market, broken structure and does not continue it. So for us to be sure that the market has continued, we have to see something like this. The market, catching a break here, then breaking this structure. Now we can see that there's a new zigzag pattern formed, and that means we can now comfortably say that the market has changed structure. But for now, we can't really say that. We can't really say that for now. So, like this now, we will still go with the mindset of both buying and selling because the market is on a downtrend. If you notice for the past 1, 2, 3, 4, 5 days, the market has been selling massively. So we cannot just enter now and say we're looking for buys, you understand? Because the market, even if the market is going on an uptrend, it's very possible that it might actually want to reach this point before it starts going up, this point over here, or it might actually want to reach this point over here also before it might say want to start going up, because these are different supports that the market might want to bounce up from. You can call them supply zones also. I'm sorry, you can call them demand zones also, depending on how you learn. So for now, we are open to both buy and sell because we don't have a clear movement. If the market didn't have, like, maybe if it didn't break this structure over here, if the market didn't break this structure over here, and maybe it was around here and it was going down from here, we would have been looking for just sales. But the market broke it, so we can look for buys also. But now the market didn't break it and broke it again, like the second time for the confirmation. So we cannot just say we're looking for just buys. So we are both looking for buys and sells. These are rare situations. It doesn't happen like this most times. Most times you get a clarity of what you're actually doing. So now at this point now, we're going to use the 4 hours to really, really know what we are looking for in the market. Let's go to the 4 hours time frame. Okay. So now we have to zoom in and see what's really happening here. Okay. So we saw that this is how the uptrend had been here. The uptrend was in this format, and the market started going down. Now let me zoom in a bit. Now this down is going. It has broken numerous structures on the way. The market is kind of choppy here. There is nothing really clear, but regardless, we can still see how it's going. You get is going down. So we can literally see we can look for downtrends. Yeah, we can look for downtrend. Now, the market here now is choppy. I mean, I say downtrend. We can look for sales. Okay, the market here is actually choppy, but before it became choppy, there is this massive movement that happened in the market. This is a 4 hour candle, and it moved down massively. Now, remember, we don't give a fuck what happened here because everything that happened here is like in the past already. You understand? This movement has already been mitigated by this movement. All these BB candles have already been mitigated. But this movement, even if it's not so big compared to movements like this, is actually something also. So what do? We mark there now as a structure that we can consider selling from. Okay, we can mark there as a structure that we can consider selling. I'm not saying that we are going to sell from this place, but it's something that, okay, the market start reaching that level, we can consider selling from there. Okay, so what we do next from here is that we go to the 1 hour time frame. Sorry, 1 hour time frame. Okay, so in this time frame, um, we see that the structures now are clearly. We see the structures clearly now. Market is on the downtrend here, going down, up, lower highs and lower lows, going down, going down. So perfect. Now, if we had come earlier and we had saw this movement right here, where the market went down, we saw that the market used a big momentum and it went down and broke this structure, even if it's with a wick. We would have worked with this point over here directly. Okay, we would have worked with this place and we would have looked at entering from here. Notice the market came back to mitigate it now because this is a big move. Now, I think in some other videos I'm going to talk about things like inefficiency. Some people call it gap, or some people call it fair value gap, depending on what you want to call it. I call it inefficiency. People call it different things. So I would talk about something like this in maybe in next videos. But for now, if we had met the market at this phase, maybe it was just around here or here, we would have considered, you know, placing our orders here. But now that we have missed it, what next do we do? What we do now is that basically the market hasn't broken this level yet. The market hasn't broken this level yet. You understand? So we can't say we're looking for sales until the market has broken these levels. Then we cannot look for an inefficiency that broke this level here, and we cannot look for entry in those places. But that hasn't happened yet. So what can we do next? Now, what we can do next is that we can still try and enter the sell to the downside, but we can't do that on this 1 hour time frame because this is only the structure is showing us, and from this structure we can't really do much. So let's go to the 15 minutes and see what we can do for us on the 15 minutes. So on the 15 minutes, we see that the structure now is now getting clearer. Okay, we can now see some, lower highs and lower lows. We're seeing some break of structures over here, but nothing too legit. I feel on the 5 minutes we're going to see something reasonable to work with. Okay. Now, ordinarily, me personally, well, I don't think most times I'm going to like try to go down this low just to look for an entry. I think on the 15 minutes I would have been very, very okay. But just to get a clearer structure and to tell you guys how this whole analysis work out, that's why you see me going down to the 5 minute time frame to get clearer structure, because but lower time frame structures are not really strong. That's why me I prefer doing things without reaching the lowest time frame. Personal, just a personal thing. Some people can go down to the 1 minute time frame. As far as technical analysis, you can do whatever you want to do. So we see that the market is going up here, enters here, that mitigated that particular order block over here. See the market went down very well. Now you can see how the inefficiency worked. This can only be smart money. You understand? Somebody, a normal, we local traders can't make this kind of move in a short period of time. This is just a 5 minute time frame. So we local traders can't in 5 minutes make this kind of rapid movement. It has definitely has to be smart money that entered the market over there. So it has mitigated their orders over here and it's now going down. Now we can look for a way to join. Now I was not really seeing a clear path to join. You understand? But if there was a very, very huge candle in any of these structures break here and here, that would have been a very, very clear sign for us to, venture into the market. Now, left for me, what I will do in this stage personally is that I will have to wait for the market to break this bigger structure here. Then I now look for my entry around all these places to continue it to the downtrend. That is if the market continues falling down, because the market can give a different signal for buy and we have to start looking for buys instead. But for now, all we are seeing now is sell, 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 because smart money just entered the market from here also. So definitely we're expecting the market to go back to this point because their order reached here and they entered, they mitigated it again. Hopefully, we are hoping that the market will still go down and reach here again and maybe probably break the structure so that they can make profit or they can break even regardless of anyhow it is. So yeah. So what me personally I would do here, just for those that would want to force a trade, because me personally, what I would do is that I would wait for the market to break this structure. Why is that I didn't see any smart money moves around here. Understand? I have to wait to see a movement like this again before I get interested in entering the market. But for those people that don't need to see a big move, which is it's very possible, you don't always have to see a big move. Just a personal thing for me, based on the fact that I like, work with smart money. I like to see, okay, the big boys are, entering the market. Let me enter with them. Now, the best way to work with would have been here because here there was an accumulation over here, and the market now broke this accumulation. Even if it didn't break it with, a smart money move, it's still a break. So what do we do is that we looked at the last buy candle. We highlight the last buy candle before the sell that broke the structure. Okay, we highlight it last count before the before that bullish structure. Now, had it been this particular movement here was able to mitigate it already, then this area won't have been valid again. But since it hasn't yet, we can assume that it can use this structure over here as liquidity. Okay, so that is that for that. Now, me personally, I won't take this trade. I'm just showing you guys how you could have analyzed it if it happened. Okay, so this is what you're going to do. There, if you actually still want to do the one whereby you're going to like highlight this structure instead, but I would prefer this one because of you can use it as liquidity. The market always look for liquidity, so here is a more probable trade than you just highlighting this particular structure here, because this particular structure here also it broke down this structure, but it didn't break it down with a serious move down to the downside. So it's not really valid. Not really valid. So for this now, what we're going to do is that we're going to sell, we're going to place a sell order. Forex is all about taking risks. So something like this, yeah, it will astonish you that it's going to work out regardless. Sometimes it's the trade that you didn't really put much analysis into that plays out. That is one thing about Forex that I've learned from experience. Okay, we're looking to go down to the down. So this is a 1:5 trade. We have a 4.3 stop loss. We have a take profit of 323.6 pips. That's a 1:5.49 risk to reward ratio. Now this is a perfect analysis. Okay, it would have been perfect if we had a serious move, a serious break from this side. Then the sell would have been very, very perfect. But what we are looking for now in the long run is we are looking for this break here then. Or if we can get any serious break also that can break here, that can break this structure from here. But the candle has to be like massive that can break this structure here that this smart money, you know, cost. Then we know that we are on the right track. So, but for now, this is what we can work with. If this was a crypto, if this was crypto, then this would have been a very, very valid trade on crypto because smart money doesn't really work. Like you don't really see the footprint on crypto so much. But here is something, you understand? Like we look for smart money because they trade Forex. Forex has a bigger market than crypto. Over like $1 trillion is being moved on Forex daily. So smart money is always involved and it's good for us to look for their footprint. You understand? Look at smart money here. Let's search again for another smart money movement. You can consider this smart money. Okay, definitely smart money. Mm, this is definitely smart money. Mm, you will see their footprints in the market. Definitely smart money. Definitely smart money. Definitely smart money. It took a while for this mitigation to happen, but it happened here. Definitely smart money. This is definitely smart money. So smart money always leave their signs in the market, and I think in next videos I'm going to make, I will talk about the signs that smart money leaves behind. I also talk about the signs that smart money leave behind. I'll talk about inefficiency, how to trade it, and so many more other things in the next videos. So for now, this is analysis on AUDUSD. We'll see how it plays out. So yeah, that's it for it, guys. So please follow this channel. This is my new channel. I'll be posting analysis daily to help those people that don't really know how. Yeah, to help those people that don't really know how to do top down analysis. So you do well to follow me, and I'll be posting analysis. I think about like up to 3 analysis in a week, probably more, depending on how the whole thing goes. So yeah, do well to follow me, and yeah, that's it.